Hey, what's up, everybody? My name is Sureshnie Ryder. Welcome to another Study Sesh with Boston Broadcast. We are unpacking and delving into really complex topics, but we're making it snackable. We're making it easy for you and mostly myself to understand. And I'm so excited to introduce our next lecturer on board. Her name is Esna Sureshnie, and Esna and I are going to be talking about cashola. We're talking about money and the 5 basic principles when it comes to accounting. The way I see it, it's like you need to build a house and you need to build a foundation, right? But you also need the 5 most important building blocks to help you get there. Esna is the lady who's going to help us unpack it all today on our Study Sesh. Hey Esna, what's up?
Hi, I'm good, and you?
I'm good, thank you. I said building blocks, I said money. I am so excited to unpack and unlearn the 5 basic accounting principles. So if I were to say, hey, Esna, what is an asset? Because in my brain, asset is something that I own and something that is mine. Am I right?
Yes, so asset would be something you control. So it's something that's yours that you use to generate future economic benefits. So if you take a sneaker factory, for example, like you have a business that is selling sneakers, your assets would be the equipment that you use to manufacture those sneakers. Even the sneakers that you have on hand that you have to sell, those would all be your assets. So it's anything that generate future economic benefit for you.
Okay, so the stuff that's yours and the stuff that you're working with is your asset, nobody else's.
Yes.
One of the big things I always learned in the industry when we were starting a new job, everybody wants to buy themselves a car. And then people will say, oh, a car is a liability. It depreciates over the years. Is that the correct way of saying is that a car is a liability, as an example, if you're a small business owner? Or what is a liability?
No, I think if you do own a car in your business and you use it to generate future economic benefits. So if you, let's take, for example, again, the sneaker factory, if you own the car and you drive to your clients to drop off their sneakers, then your car would be an asset for you. But if you have a loan or bond for that car, if you still owe money on that car, that money that you own, that would be the liability. So anything like accounts that are outstanding, loans, the bond, that all are stuff that you need to pay in the future, and that would then be a liability.
Ah, got it. See, it's now beginning to balance out for me. So an asset is something that we own. For example, sneaker factory, we're looking at the sneakers and the actual equipment I take to use the sneakers. And a liability with, for example, I borrowed some cash from my family to help front this company or to like invest in this company, and I need to pay that money back. So that would become my liability. Yes?
Yes.
Yay! This is making huge accounting sense for me. Listen, in my age right now, and this is the beauty of having these basic accounting principles. These bricks are not just the bricks for when you're starting off at university or you're starting off in college. These are the bricks to understand all the way until you are married or you've got kids or you're looking at retirement. It's about understanding the basic principles because they create the foundation for life. I'm learning how to budget all over again. So these little accounting principles really come in so handy, especially that we know so many young people are interested in starting businesses. And if we have these basic accounting principles, we are good to go. So we've unpacked what an asset is and liability. How about equity? What does equity mean? Because in my brain, equity means we're all equal or we all have an equal share.
So equity, you can divide into 2 parts. So the first part would be the shareholders' equity. It's what they put in to start the company. So if you put in, for example, 100,000 Rand to start your company, that's your shareholder equity. Then you have the retained income. So that would be the sum of all your profit and loss. So if you made a profit this year, then that would be equity. If you made a loss the second year, then that would be in your equity. To sum up the whole equity, it would be the shareholders' part of the business. What they put in, the profit that the company made would also be theirs. So that would be their equity.
Ah, got it. That's a nice one. The important brick, and I think this is the question that we ask most of us before we start the sneaker factory. How much money are we going to make? What's the income looking like? So, what is income?
So income or revenue would be all the money that you get in. And not only money, like it could be like if you sell something like a sneaker factory where you sell sneakers, if you sell a sneaker, the amount that you put on your sneakers, for example, you sell a sneaker for 1,000 Rand, that 1,000 Rand would be your income, would be your revenue.
Okay, that's the question I wanted to ask the most because I think that's the defining part that makes you want to jump into the sneaker factory business. Am I going to make a profit or am I going to make a loss? And if that's the way it is, then I know exactly what I'm doing. And then what about expenses? Oh, man, this is a bit blurry for me because sometimes we get ahead of ourselves. I won't forget, as a kid, I had a little a business course that I studied, and I was production manager of a lip ice factory. We had to make lip ice, okay? And I remember as a production manager not being too familiar with how to use my budget, and I bought too much for a specific liquid that goes into making the lip ice. And I remember that became a massive expense, which cost our business along the way, and then we had to recoup and recover. Is that very similar in my understanding of how to manage those expenses so that you don't go over budget and you don't find yourself in the red?
Yeah, so expenses would be any economic outflow. So within a manufacturing environment, you would have your direct expenses that would be the cost of selling your product. So it'd be the cost of manufacturing your product. With your lip eyes company, you would have had all the ingredients to manufacture the lip eyes and all that you bought, that you paid to get the ingredients, that would all be an expense for you. When you look at the sneaker factory example, the material they use, the coloring they use, the soles, the inner soles, the all of those, when they buy that, that would be then an expense. Then you also have your other operating expenses, like the rent you pay for the building that you use, the water and electricity. All of those stuff would also be expenses. And when you take all of that into account, you take your income that you received for example, if you ask 1,000 Rand for the sneakers, it cost you 600 Rand to manufacture that sneaker, including the portion of the rent and everything taken into account, and you deduct your expenses from your income, then you get your profit.
That's the one that's the most important. So
Yeah.
I got the basic principles. Is this enough for me to go forward in starting a small business or just living life without being in the red?
I think if you take into account your expenses should not be more than your income, then you're good to go.
I think that becomes a hazard when someone like me goes shopping. Sometimes I overshoot my budget and I think in my brain I have all this cash available. And meanwhile, I'm dipping into something that I don't have. So it's nice to know that I need to balance these two and also keep back of mind what my expenses are and what is the projected income so that I don't get myself into any trouble. Esna, thank you so much for walking us through the 5 basic accounting principles. I think that was actually very cool to understand, easy to unpack, and pretty easy to remember as well. In my head, I'm going to imagine the sneaker factory and those 5 principles: assets, liabilities, equity, income, and expenses to help get me through. I appreciate your time. Thank you so much, Esna.
Thank you.
So that was another session of Study Sesh with Boston Broadcast. I hope you tune in for the next one. It's going to be an absolute cracker. The best part of this whole thing is that you get to walk away with amazing takeaways and hopefully it makes a difference. See you soon.